maybe switch gear a bit. So we've talked about the UK and the experience. One of the biggest open banking markets, and one that hasn't been driven by regulation, is the US. So for many years, customers have been able to share their data with third-party platforms to help money management and all of these things. Very much market-driven, huge usage volumes, but without any regulation. And that's a market that's going through quite a bit of change at the minute. I mean, we've talked about it a lot, but there's been a real roller coaster over the past year and a bit. So there has been a regulation that was written into law, but with the new administration, there's been a lot of challenge around the specific regulator, the CFPB, but also the regulation, and it's in a bit of a holding pattern at the moment.
Yep.
Yet at the same time, what we've seen is a real big move in the market with JP Morgan going out and saying, if you want to connect to our APIs, you need to pay us for that service. And I think it has really changed the seriousness of the commercialization conversation. I guess question, that sort of model of charging for basic customer information, how do you feel about that? Do you think that's sustainable? Is that the right answer, or is that more of a catalyst for market discussion? What do you think?
I mean, I think it's interesting. I think I wouldn't want my bank to charge for my information because I think it's mine. On the other hand, when I saw that, I did think, well, fair enough, it does cost the bank to put in place these APIs. And we know the bigger the bank, the more complex the systems, and presumably the more expensive that is. And so to cover that particular cost to open up safely that environment, I'm sort of okay with that. I think, it drives the commercial model of other people and other innovative organisations, of course. But it does seem quite fair, and I think that fairness is important here. I think the interesting thing about open banking in the US is it feels to me, it's odd, isn't it, that, the US is leading on the world on tech, but it's actually sort of behind in terms of this use of data in financial services. And you have to think about why that is. And I suspect it's because the sort of state of the US financial services market is very different to what it is in the UK. So although there are, relatively few post-crisis, I don't know how many, but, let's call it a dozen very large banks, there are hundreds, I think, still, or certainly many tens of the smaller banks across the states, the individual states, I mean. And so, and people tend, don't they, to have still a more personal relationship with their banks. I think if you're in America, you see the banks on the high street in a way that we're seeing them much less now. So I think that there's a different relationship between the customer and the bank. It can be more local, it can be more personal. And I suspect that that's, one of the reasons that it's taken longer to take off. The banks we know have, in the same way as I described a CEO in the UK saying this is outrageous, it's our data, how on earth, how outrageous that anybody's coming to take it from us. That has happened in the UK, in the US. And I think, Jamie Dimon's intervention is probably a way of trying to navigate that particular difficulty. If you want the data, then you have to pay us to access it. And I sort of get that. My own view is that it is only a matter of time until US customers are saying, well, hang on a second, I can now see that the making available my data in a way that's going to facilitate my life and make me better off is almost a human right. I mean, I think it's a really, really important thing that my data belongs to me. And so I think that, as I say, I think it's a bit behind in the US, but I think once it really takes off, I think it will be unstoppable. And you touched earlier on the move from open banking to open finance, so that we can look at all of our financial data in the same way we can look at banking data and make payments through open banking, make tax payments through open banking, which we can do today in the UK. I mean, that's just going to be an easy way for people to deal. So I think that, being easy, open, transparent, fair and safe is something everybody's going to want.
Yeah, I agree with that. And just reflecting on some of the points you made there, I think the US is, on one hand, it's been way ahead of the world because there's been huge volumes of data sharing, and and actually across quite a broad spectrum. The standards cover a broad range of financial services products and tax reporting and all sorts of things. But because there hasn't been a regulatory mandate and a push, it's not been done consistently. But you're right, it's a very different market. You have huge volumes of financial services and a lot more local. I think one of the other interesting things is you have a small number of big and very powerful data access providers that almost sit in the middle. And I think one of the things that the banks and JP Morgan were doing was saying, hang on, your business exists because you're accessing our APIs and selling it on. Actually, we need to rebalance this, because it is a quite unique market with such big data access players. Now, it'll be interesting to see how it evolves. My guess is the next version of the 1033 regulation will probably allow space for this charging. It feels like that's the direction. I think what'll be interesting in a number of markets, I think we might see then a level more sophistication in terms of charging for data access, because that consumer data right is entrenched in a lot of countries, and there's a level that I think regulators will say this has to be free, and then it's for banks to say, okay, well, how do I add more value around that? That might be you can access a longer period of data, or you can access it more times a day, or we'll enrich it so it's more valuable and make their money there rather than a pure data tax. So I think we'll see it evolve into a more sophisticated model. But US will be a very interesting market to watch.
Yeah, I mean, just to add to that, to sort of reinforce my thought process, which is the data, I think, belongs to the customer. I think that there'll presumably be some cases that try and work out who owns data at some point, but I don't think that I want to be part of a financial system where you can buy my personal data. That feels wrong. For me, it's sort of about the pipes. If I've got to build pipes for you to, with my consent, to access my data, then building those pipes, I think it's sort of fair to say I need to be recompensed for doing that. The second thing, which I think is true in the UK and in the US, is that this is one of the problems that we had with Snoop. Once you've accessed the data, the quality of that data is really important. And as we know, certainly those of us in the market know, and probably would shock some customers, the quality of banking data over the years has not been great. And the sort of what we used to call a single customer view is definitely not great. You know, there'd be Jayne-Anne Gadhia data in all sorts of different places through all sorts of different banks. And to make it really effective, I think you need to be able to access all of that data, preferably in one place, preferably clean and preferably accurate. And so I think there is an overhead on banks, and indeed a sort of practical and moral requirement to look after data and make sure that it's clean and usable at all times. And I do think that I'd be prepared to pay for that for my banking and financial organisation to know that they're looking after my data properly. I think that's probably fair to say. Well, we need to have some investment to make sure that's the case. But once banks have done that, and I'm not suggesting that everybody's all over the place, because I suspect it's much better than it used to be, but probably not as good as we'd want it to be, and we want to make sure everybody continues on that journey. But once data is properly scrubbed, as it were, then the power of AI ought to be something that we can really bring in too. So you have not just open banking, but then whoever you are, the innovative institution, maybe the customer, definitely the bank, could use large language models to be able to identify where they can bring real benefits to customers. And I don't think that's even touched yet.
Yeah, I think there's some really interesting challenges to work through on that. Because, I mean, fundamentally, what open banking and open finance is doing is it's creating the pipes that allow the secure consent-based access. And there's a phrase, data's the new oil. If what it's doing is it's laying the pipes. I think what AI brings is the tools to then deliver hyper-personalized financial services.
Exactly, yes.
And financial services, I heard someone describe this really well a while ago. I can't remember who it was, but basically said, typically you can break a lot of your financial services engagements down into two categories. Stuff that's so boring you don't have to want to deal with it. or stuff that's so complicated it's hard to get your head around. And there's definitely a huge opportunity for AI to help drive much better financial outcomes, much more hyper-personalized advice and outcomes for people. I think that's going to challenge a few things, though. One is actually, how do you evolve the consent model so that a customer can actually get an AI bot or whatever it is to operate on their behalf, and for that to have the right guardrails around it. But also, how does the regulation keep up? So I'm not sure anyone knows the answer, but I think there are some challenges to come, but the opportunity is huge.
Yeah,